Tackle today, the Justice Brothers from Tackle Trading, bringing you all the charts, news, and analysis so you can be informed in your trading decisions in just a few minutes. Earnings season underway. Deep Seek fallout. Market trying to rally from that. We're going to break it all down. Matt had a fantastic day one of Master Trader. Listen to a little bit of it. Matt's such a great teacher. If you're a pro member, there's still a day two, and then we'll have another Master Trader around the corner. Great time to be sign up for a free trial. Matt, we had the deep seek news. Well, if you are a trader, if you're an investor and you read news, you had no shortage of things to digest. Oh my goodness, everyone in the world had a take on this yesterday, didn't they?
Oh my goodness, it was all over the board. There's no doubt about that. Pro, con, wondering what's going on. And I think that's where the market kind of is today, still wondering what's going on, specifically with how DeepSeek is impacting the AI trade and CapEx spending and all that. There's still a lot of fog in the market right now trying to figure that out. But the simple reality is DeepSeek, the things we do know is it's a much more efficient model built on much more cheaper infrastructure with similar quality to what we're currently seeing with ChatGPT and other LLMs. But I'm just going to say yet again, the LLMs is not the end game or the race when it comes to the AI arms race between China and the United States. That race is to AGI. And when you're talking about the breakthrough that DeepSeek had yesterday, which was a fascinating breakthrough, there is no doubt about that. When you're talking about companies in the semiconductor down, like NVIDIA yesterday down 15, 16, 17%, Broadcom, Micron, all these other juggernaut companies within the semiconductor space, yeah, they were DeepSeek certainly was a disruptor yesterday. But I'm just going to point out one simple thing. In the race to AGI, there's going to be 5 or 6 more breakthroughs like we had yesterday. And so the end game here, which DeepSeek did in proving out its efficiency models with LLMs, is certainly to say well done, congratulations, all that jazz, and look at it from a positive perspective with the AI build out. But that's not the end game. The end game is AGI and beyond. This is a step in that. And I'm hearing from a lot of AI producers in the United States that this DeepSeek information that came into the market over the weekend and obviously created a lot of volatility yesterday in the market, that it is going to light the fire underneath the innovators here in the United States. And so we'll see what actually transpires. But as of right now, I think we're still kind of trying to figure out as market participants, specifically within the AI space, specifically in the semiconductor situations, what truly does this mean from a long-term perspective? And as of right now, I don't think anybody in the world that is throwing a billion takes out there right now, and I've listened to a lot of them in the last 48 hours, quite frankly, I don't think anybody knows, right? There's still a lot of information that we do not know. We know it's more effective. We know it's more efficient, but by how much, that's what we don't know. And another thing, Mark, in this AI build out, in the race to AGI, there's going to be these breakthroughs like we talked about, but at the same time, it's not the end game of LLMs. And I just want to be clear on that because this is an LLM conversation with DeepSeek and ChatGPT and Claude and the power that goes into that. But it's not the end game here. So it's going to be interesting to see the fallout from the semiconductors, if they try to recover here, or if we see some more volatility to the downside. Obviously, you're in front of some very, very important earnings, such as Meta, such as Apple, such as Microsoft. All of these companies are 1, 2, 3 days in front of their earnings reports. And so I kind of feel like we're going to have a lot more information from the actual truth of what DeepSeek means to the AI trade and the infrastructure build out as we hear from these companies this week. And we get a little bit further into this story and understanding what truly is DeepSeek.
Yeah, tomorrow is a big day in the markets. We get ASML in the morning. That gives us, and ASML has been one of these kind of bellwethers. It's kind of been the new Netflix in many ways, man, and takes on
Good
extra
call.
emphasis tomorrow. Like, ASML over the last several quarters. Remember when Netflix was hey, how Netflix went? So went the market.
Netflix was the gut check for early earnings season.
ASML has been that, right?
For
Over
last
the
year.
last,
Yeah.
yeah, and so like how ASML and how price action in the morning is going to give us some sign, but the day does not slow down. So we get ASML in the morning, we get the Fed, Jay Powell speaking in the afternoon. We previewed that on the podcast. And then we get Microsoft, Tesla, and Meta after the bell. Those ASML and earnings reports were already going to be significant. They take on extra significance. Tomorrow's a big day, isn't it?
Yeah, especially when you're talking about ASML, like, Microsoft, Apple, they're kind of recovering here today, but the stock specifically tied to the Nvidia downstream is what I'm really looking at right now to kind of understand how much damage it has been done to the semiconductor side of the AI trade. Remember, the AI trade yesterday was really just a semiconductor conversation. SMH obviously was getting beat up pretty healthy, but it wasn't across the board in technology. Software companies across the board were actually up yesterday. AI software companies did really, really good yesterday. Apple, for example, a software giant, was actually up on the day yesterday. And so, but companies that were really damaged yesterday were the semiconductors that were tied to the AI build out, or specifically the downstream of Nvidia, like the supply chain of ASML. And so, yeah, I think it's ASML is sneakily. It was always going to be an important report this week. There's no doubt about that. But it's sneakily up there now with the importance of Apple, and maybe not from a macro perspective, but just from a thematic perspective as we're navigating this week. I think ASML is a very important report, and with the price action yesterday, took it on the chin a little bit, no doubt about that.
Yeah, I know. And so, we'll obviously preview it in the morning. We'll have ASML numbers tomorrow morning. We'll report on that. Price action is going to be very interesting. But what do you have for us today in stocks in the
Real
news?
quick question for you. Out of all those data points coming to the market in the next 48 hours, which one's the most important to you?
Well, depends on which position I have. For your average position for gold, for silver, for my average stock, the Fed.
Yeah.
Right, for the SPY play I have uh for semiconductors, it's going to be kind of Microsoft and ASML's tied for me.
Yeah, I think you gotta put the Fed there, kind of one, right, kind of with what the
Yeah,
dollar.
for your average play out there, for your average stock, yes, absolutely.
Yeah, for the general marketplace, I think you got to have the Fed one. You got some real decent improving conditions across the market right now in everything not tied to the AI trade. You got the diamonds all the way back up at resistance after a beautiful reversal and then some power momentum. IWM still kind of hovering there underneath that 50 period moving average. We talked about the reason IWM is lagging in the newsletter this previous weekend. If you're looking at IWM from a bull perspective, you got to be taking into account the 50 period moving average right now. RSP is forming up a pretty decent secondary pattern, kind of alleviating that overextended situation. And you're going into a high base. You're going into with a pretty decent high base going into this cluster of very important news over the next 48 hours or so. The Qs have obviously been part of that problem, but the Qs have been a little bit of a problem outside of a couple of days last week in general. And so I got to still say the Fed, given the fact that the vast majority of the market is actually doing pretty good right now outside of that specific AI trade. And
Yeah,
and
absolutely.
and I one further point on that, with the recent violation of support against the dollar, you got a potential head and shoulders formation forming on the short-term side of the equation. This is on the backs of some slowing momentum and trend that we pointed out from a week and a half ago. That was kind of the early precursor to reversal analysis. You could see some short-term, because right now you don't have a short-term downtrend. Right now you have a potential reversal. But if the Fed comes out with a little bit of a dovish take, I would say here, and that's an if A then B, you could see a violation of that 107 level mark. And remember, how much did we talk about the importance of that 107 level for a very, very long time? And now you're right back at that 107 level from a bullish retracement perspective on the weekly chart, short-term bearish reversal situation on the daily chart. A violation here would be pretty supportive of growth out of the majority of the market. So I gotta say Fed still. I mean, I know DeepSeek's vitally important right now to the AI trade, and we're trying to figure out a lot of what's going on specifically with how that's going to impact CapEx spending and the infrastructure build out of the AI trade. But I still got to say, given the fact that the totality of what's going on from an interest rate inflationary perspective, the dollar sitting at a massively important support level, I still got to put the Fed one there.
Yeah, absolutely. What do you got for us today, bro?
Yeah, we got a few earnings reports to talk about very quickly. A couple Tackle 25 stocks, no doubt about that. Let's start with those Tackle 25 stocks. Tackle 25 GM here having a negative day to a positive earnings environment. GM comes out with an EPS beat of right around 3.8%. Nothing very good. EPS beats are averaging over 7% right now. So a beat against 3.8% is decent, but not great, we would say. Revenue did increase 11% year over year. The company raised EPS guidance by over 6% for 2025, but a little bit of a negative reaction here. Kind of feels like a pre-earnings decision made by investors that did not love the news coming out of the actual report. You saw the initial sell on the numbers, continuation of that sell kind of happened after the conference call, a little bit of negative reaction. Now you're right back down into that support level. It's a really good cover call stock right now, and it is still a really good cover call stock, but however, not a good directional situation right now. Lots of volatility between 50 and 55. You got this as wide range volatility. You would like to sell a covered call, take advantage of that volatility. When you're looking at outside of GM, RTX is a newcomer to the Tackle 20, not RTX, but RTX did report earnings here today. RTX actually came through with a lukewarm report. I wasn't going to talk about them as much, but we did have RTX, Lockheed Martin, Boeing all report earnings. But what I was going to do is go to RCL, which is Royal Caribbean. And Royal had a really good report here, Mark, today. Royal Caribbean actually came out with an 8.7% beat against expectation. Revenue was up 13%. They raised forward-looking guidance just slightly. They had positive bookings, including record-breaking bookings as well for RCL. RCL gapped, ran away from the gap. Pretty good look on a pretty decent earnings report coming out of RCL. Obviously, nobody's looking to chase a candle like that. You would certainly be looking for some degree of slowdown, secondary development from a trader's perspective. And then when you're looking at some of those aerospace and defense companies today, like I said, you had Boeing, you had Lockheed Martin, you had Raytheon. Boeing here came out, and Boeing showed a loss here today. That shouldn't shock anybody, given the fact that that's kind of what Boeing does. They lose money. If there's one thing I can just put my clock to, is Boeing going to lose money in the upcoming earnings season? That's what Boeing does. They lose money in the upcoming earnings season. Over the last 5 earnings seasons, you've lost 47 cents to a negative 113 to a negative 2.9 to last quarter negative 10.44. So I guess you can make the argument that there's a improving condition when you lose $10 a share last quarter and you're only losing close to $6 a share this quarter. And so that's about as positive as I can paint that fundamental condition. But the technical condition does look pretty decent here. You did gap up over resistance at that 180. You would like to get that dialed in. Now, not every aerospace company went up today. Lockheed Martin actually gapped down on their earnings report where they had an official beat on EPS. They came in lukewarm on the revenue side of the equation, but they officially lowered EPS guidance. And so that's a little bit of a difference on Lockheed versus what the pricing we're seeing on Raytheon and on Raytheon RTX. And then obviously Boeing, both trying to price higher here today. Well, the difference on Lockheed is they did, in fact, lower guidance. But that's what we got for stocks in the news.
Well, listen, thank you for the breakdown. You talked about the importance of the dollar tomorrow. That's going to have an impact on commodities. Fed comes out, we're going to see movement. We'll see how the support levels hold up or if they break. And then, well, silver has a good pattern, gold has a good pattern, and you're likely to see a reaction. These things almost entirely will be focused on the Fed tomorrow with patterns that could trigger as early as tomorrow.
Yeah, you got a pretty good look here on silver above 28. I think every coach of tackles looking at silver above 28 right now, but you're going to need to get supporting data coming out of the Fed for that to occur. The silver's not going to be doing that before tomorrow's Fed action, and so obviously there's going to be some volatility to that. But keep an eye on 28 on silver. It's good to see gold kind of recover here today. Gold was the only, don't get me wrong, there was a lot of shock and awe in the market yesterday, but when that shock and awe comes into the market, the path of least resistance is down. And if you've been a trader for a long time, you've seen these types of things before. So they're always crazy but they're not shocking, quite frankly. Well, I was a little surprised by gold yesterday, honestly. And I know it wasn't a big downward pressure in price, but with the dollar breaking support, the gold just did not make sense to me. It makes a little bit more sense to me recovering here off that 9 EMA here today. And then on the crypto side of the equation, Bitcoin trying to hold firm and recover a little bit after that violation of the high base yesterday due to the volatility, the unforeseen volatility, obviously due to DeepSeek. You're looking at IBIT here from a pure technical perspective. The gap down yesterday did find the 20. You climb back up into that 9 EMA. But once again, this is breakout or bust. And so you got to be looking at that 61 handle. Any recovering here from there, you're still looking at that 61. There's just too much overhead at 61 to get too excited at 59.
Yeah, it's a little messy right now. It's a little messy. Listen, and one, and just real quick on energy, looking at crude oil. I mean, you could even bring up natural gas. We've seen really negative price action in basically the entire energy complex since the DeepSeek news. This is, semiconductors. We might need a lot of chips, but if those chips can be powered by levels, I mean, this is just, and I've seen it in the price action, I've seen it in the intraday charts. Like I've seen nothing but negative data points, since Monday opening bell in basically the whole energy complex right now. Seems to be a little bit of weight on it right now, Matt.
Yeah, there does. And obviously when you're tracking a bullish retracement, you track it through the depth of the retracement, you track certain levels. And the simple reality is the first level you track is shallow retracements. I talked about this a lot in the Master Trader last night. And I actually talked about crude oil and energy as a case study in the pullback situations, talking about how the first level you really kind of look at is those shallow retracements, 21-23% pullback situations down to the 9 EMA, for example. And guess what occurs there? You're wanting, you're expecting, you need to see a little bit of development there. Well, it didn't sniff development at the 9 EMA. Then as you work a little bit deeper into standard retracements, you start to see it 2 days ago, last Friday, you start to see it kind of dial in a little bit, try to fight back up, but you don't want to fight that 9 EMA. It's got to get back up above that 9 EMA. Doesn't do it, just shows a little bit of slowing momentum, continues to come down. Now you're at that kind of that deeper retracement here on crude oil. You could say the exact same thing for energy right now. And so as you and basically what you need to understand in the depth of the retracement conversation is, where are those key technical catalysts that you expect to see development? What type of development do you need in terms of the ultimate concept of confirmation? In a shallow pullback, you need to see simple confirmation. In a standard retracement, you need to see standard confirmation. And in a deeper retracement, like we are seeing on crude oil, like we're seeing on energy right now, you need to see what we call a king's bed, which is short-term consolidation, which allows the volatility to decline, but it also allows those stubborn shorter duration moving averages to kind of flatten out. And so when you break back up, you're breaking back up into a clean air environment. So right now you got crude oil and a lot of energy right now as deeper pullbacks, deeper retracements. But once again, you doji here, you consolidate for a few days, you break back up this cluster of the 9 EMA, the 200 and the 50 here. I'm going to like that look. Despite the volatility from a trader perspective, I will like that look. And specifically, if that consolidation king's bed happens in the time frame where we get through ExxonMobil, Chevron, I think that will look very good. So right now, yes, you're absolutely right. Deeper retracements, stay away. But once again, you're at that last stage in the depth of the retracement. If you don't develop here, it's a non-story. It's gone from the radar for a short time. So I do think it's important to keep an eye on energy and crude oil here, just because you're at that last stage of the bullish retracement. And if you see development here, it could still look pretty good. So totally get the concern here, totally understand the causation of that concern. But at the end of the day, we're at a bullish retracement. We're at the last stage of the bullish retracement. Let's see what development can occur here.
Listen, it's going to be a fun lounge. Going to be on it with Matt. Come join the fun. Tackle Trading 15-day free trial. Go sign up for today. This is an amazing community. You want to be a part of it.